Hi, Alessio. Hope you're well. In this video, I want to draw your attention to something interesting that happened on CNBC recently. You might have seen this video yourself probably, but there was an interesting argument. Actually, if you can call it an argument, it was more of a feud between these two anchors on CNBC. They were really going at each other. In fact, let me play the clip for you and then we'll come back and comment on it. Here it is.
Tell us about what's happening
Still
right
looking
now.
at the coincident and lagging indicator. Let's see, for a while it was how can stocks be where they are because of oil prices? Remember that was your take then.
Right.
How can it be based on where interest rates are right now? Then it could be how can stocks be,
Right.
and then it was every single discussion you have over the weekend is about how can stock prices be here when the economy is here.
Right.
Now it's going to be your earnings, but can
Right.
you see how that probably isn't the coincidence, the stuff
Joe.
right in your face? We're going to have David Lebovitz on. He's going to say every client he talks to is asking him, how can the stock market be here when everything else is...
And that's the question. And there are a lot of smart people who have that view. You may not have that view.
Why is that the smart people? They've been wrong for 35%. Why are they smart? Just because they can see what's right in front of their nose? That doesn't make them smart. It makes them.
Joe, you missed it on the way down too.
Makes them not savvy about the market.
Joe, you missed it. You missed Joe. You missed it 100% on the way down, and you missed the 100,000 deaths. So we can have this debate back and forth, and you can try to question the questions I'm asking. But there are smart people, including your friend Stan Druckenmiller, who's argued that the market has been over. Hold on. I'm not going to do this with you, Joe. Every morning you try to question the questions I'm asking. These are questions that investors are asking every single morning. I am just trying to get through some of this clutter. I may be right. I may be wrong. Investors may be right. They may be wrong. That's what makes a market. But it doesn't make people a good person or a bad person. It doesn't make it right to act the way you are. I'm sorry.
Okay. You yelled at the poor guy about the guy
I'm not.
Yesterday with masks. Is like, why are you yelling at me now?
I'm not, Joe.
You just yelled again. I don't know.
Not.
I'm just trying to.
Go ahead.
I'm sorry.
No, you're not. No, you're not, Joe. I'm sorry.
Okay.
Go ahead with the news.
You panicked about the market, panicked about COVID, panicked about the ventilators, panicked about the PPE, panicked about ever going out again, panicked that we'd ever get back to normal.
Joseph, you didn't panic about anything.
What good is it? Why
Joseph,
not help people
died.
keep their head? I understand that.
100,000 people died, Joe, and all you did was try to help your friend, the president. That's what you did. Every single morning on this show. Every single morning on this show, you abused and abused your position, Joe.
That's totally unfair.
You abused and abused your position.
I'm trying to help investors keep their cool, keep their heads, and as it turned out, that's what they should have done. That's what they should have done. They should have kept their heads. If they had listened to you, Andrew, we're supposed to be at about 8,000.
I wasn't arguing to go sell your stocks, Joseph. I was arguing about people's lives.
We understand.
People's lives.
Andrew,
that's
it's a global pandemic.
Do the news. I'm begging you to do the news, Joseph.
It's a global pandemic.
I'm begging you,
Andy.
Please.
It's a global pandemic, Andy, where per capita deaths, we're down near the low end of per capita deaths. We're nowhere near per 100,000. Most places are at 60 deaths per 100,000. We're at 29. So it's terrible that we've lost 100,000 lives. It's terrible. But it was never going to be that we weren't going to come back and that we weren't going to return to normal. And, siding with Ackman and everything else that, giving credence to all that panic didn't help any investors at all or people with their anxiety and everything else. So that's why we're here.
So guys, I don't know what you think about that, but when I watched that video, in fact, this is probably the second time I've seen that video now, I keep scratching my head.
You probably should have packed the itch eraser.
Because it boggles the mind why these two anchors were fighting in the first place. I mean, what was the whole feud about? I mean, let me explain my point. The first thing I think anybody who's watched this channel, if you've been watching this channel in the past, I've mentioned this before, that Wall Street does not have a conscience. I'm sure you know this yourself. I mean, any person could tell you the same thing. Wall Street has no conscience, no morals, and zero brains. All right, guys? A lot of people think that these Wall Street traders must be geniuses. The truth is they're not. And a perfect example of it is these two geniuses that you just watched here in this video. So that essentially should answer that anchor's view as to why on earth are the markets going up despite the rising cases of the virus, which, by the way, is very tragic, very sad. But again, markets, unfortunately, they don't care. That's the way it is. That's Wall Street, the markets are amoral. Now, moving on, going to my second point. I mentioned just a couple of minutes ago that Wall Street has zero brains. And that actually brings me to my next point, because I'm thinking these guys, these two anchors on CNBC, I mean, they must have gone to some very top-notch university, one of the best, Harvard or Princeton, one of these fancy-pantsy universities, right? So I'm guessing they're probably Harvard educated, one of these big universities. And yet, with all that education, with all that knowledge and, supposed knowledge, with all that expensive education, you would think they know by now something which you and I know, which is that there is no correlation between the markets and the economy. We have known that for a very long time. So, I've mentioned this in my video here as well, that there is no correlation between the economy and the stock markets, which explains why the markets have been going up on bad news. All we've had for the last several weeks, while the market's been rallying up about over 30%, we've had nothing but bad news. Massive record unemployment, over 30 million unemployed in the US, rising cases of the virus and all that. And yeah, I mean, all the economic reports are terrible. And I'm pretty sure in the next few months, probably this year, we're going to hear even more bad news, probably bankruptcies, insolvencies, and all that kind of stuff. And yet the market does not care. Again, as I mentioned before, the markets are amoral. It is a complete myth. It is a myth that the markets go up on good news and go down on bad news. Absolute nonsense, not true. And I'm just surprised as to why these two anchors on CNBC did not know that fact. I mean, it wasn't even about 10 years ago now. You may remember in the crash of 2008, one of the worst years for the economy was the year 2009. Without a doubt, 2009, you had the worst economic reports, peak unemployment, bankruptcies everywhere, peak bankruptcies, by the way. And in that year, when you had the most devastating economic reports, the stock market went up 60%. Okay, simple fact. And here we are, these two guys on CNBC are completely oblivious to that fact. Now, you might say the guy on the right probably was on the right track. It doesn't matter. The fact is, I think that if you were to listen to them long enough, you would actually see that they all think that the stock market and the economy are correlated and the same thing. They're not, and they never have been. Anyway, let's move on. The third and final thing I want to mention is this. This is actually a very important point. One of the best books on trading and the markets, which I highly recommend you read if you haven't read it already. It's a book called The Complete Turtle Trader by Michael Covell. I have mentioned this book before, but in this book, you'll hear that several traders, some of the greatest traders of our time, have said that actually what really matters is not the so-called fundamentals or the news narratives. News narratives and fundamentals, they don't matter. What really matters is price action, quantitative technical analysis. Okay, so what really matters for the majority of professional traders out there is not the, what the economy is doing, what the Federal Reserve is saying, and all that garbage and nonsense. No, forget all that mumbo jumbo. Instead, focus on the price action, the technicals, the charts. So that's why you have people like Jerry Parker, one of my favorite traders there in that book, who mentions that he mentioned something important in that video, which is several of his clients, most of his clients simply don't understand when you speak to them about technical analysis or chart analysis. They just won't have a clue what you're talking about. So what some traders have to do is try to explain to their clients in a different language, which they'll probably understand. Unfortunately, that different language is complete nonsense. It's got nothing to do with the markets. So what I'm trying to say is because most average people out there, your average Joe out there, because they don't understand that what really drives the markets is not the economy or fundamentals. It's mostly human behavior, psychology, it's human emotions and irrational behavior, and price action, of course, which reflects that. Because they don't understand any of that, instead, what CNBC or Bloomberg or all these media, financial news media channels have to do is essentially speak in a language which ordinary people have to understand. And this is something mentioned in the book. It says in that book that most people want a sophisticated story that makes sense to them. That is a key phrase in that book, that people want a sophisticated story that makes sense. And let me say that it's possible some of the people watching this video right now probably want a sophisticated story that makes sense, right? I mean, people want some substantive explanation as to what's going on in the markets. They want something that makes sense to them. So they'll say, well, what's happening with the unemployment numbers? What's happening with GDP? So what's happening with the earnings and things like that? The truth is, guys, that stuff, that fundamental mumbo jumbo and that kind of stuff, while it may be interesting if you want to learn that stuff, that's fine. But the fact is, it's not going to make you, it's not going to help you understand what's happening in the markets. It's not going to help you to make better predictions about what may or may not happen in the future. All right, guys. So I think what's important to appreciate is that a lot of people want some kind of a sophisticated explanation. Again, unemployment numbers or GDP or the virus or something else. Sometimes it's about the Federal Reserve. Is the Federal Reserve going to pump more money or not pump more money or something like that? Or the fact is, forget all that nonsense.